Duke Energy has done very well over the last year. We can see it's up 24%. That is a great run for a company that's paying, well, at the lows it was paying a 4% dividend, but it's paying about 3.25% dividend, right? Over the last 5 years, it's been a little bit less impressive, right? But with the rates being low, people are not really high on the utility companies. And energy companies, right? They generally, certainly the utility energy companies, rely on a lot of debt, right? So having low rates is very important for them to continue to grow their businesses. So we've seen as rates have been projected to fall, all the energy companies and similar things like REITs have gone up as well, for that matter, right? So 5-year performance is fine. We can see finally also Yahoo fixed their all-time chart. So that has helped a lot. We can see that it has done well. It had a little bit of a peak in 2014 actually, but even from then, you are easily matching inflation with the share price, right? Going all the way even back to 2000. You see this peak here, it looks terrible. Obviously, you would have much preferred to buy it down here, but even then, inflation since 2000 has only been about 80-90%, right? So even with that, you're basically, if you bought the worst possible time, you're basically with the share price matching inflation, usually beating it, but at very worst matching inflation while reaping a very high dividend near 4%. Well, not very high, but very high for a stock that matches inflation, right? So I like two different dividend portfolios, right? Those are the two that make sense in my brain. One that ideally beats inflation, but at least matches inflation and gives you a good yield around 3.5-4%, right? And then there's other yields, dividend portfolios you can get that are closer to 5, 6, 7% that maybe you aren't expecting to match inflation with share price, hoping, but you're primarily just getting the really high dividend. I think Duke fits very well in the first one, right? Because you're going to get that 3 to 4% dividend. This is on a peak too, so you're probably going to be looking at a 4% dividend generally. You can see the PE, it's pretty low. However, generally for dividend-oriented stocks, PE is less of a factor than growth or even, something like a value stock, right? Because the PE is basically really telling you, oh, this is cheap right now. Oh, this is expensive, because you're focusing on that, the share growth, right? The growth of the share price. However, usually, at least for me, not that PE is useless. However, the more important thing for me for a dividend-centric stock is one that has, what is the share price growth over a long period of time, right? Is this matching inflation? Is it beating it? And then the dividend yield, right? That's what's more important to me for dividend stocks. If you differ, that's completely okay, although that's just what I find. So they almost exactly match earnings, so this is probably good looking forward, and it does look like you're looking at a better year next year. But just in this industry, of course, dividend-centric stock, you're in the industry, you're never going to get this blowout year. That's why people like tech, right? So many of the tech companies have just done so phenomenal. This is not a stock you're ever likely going to beat the S&P 500, maybe over a short time frame, but this is a good diversification pick and a good dividend yield pick, right? So Schwab actually really likes it. They think it'll outperform the S&P 500, right? Because they give it a top 10 percentile rating and an A. So they think it'll outperform 90% of stocks over the next year. I do not know that. I like Duke's. Full disclosure, I own this stock. I have as diversification. I like the dividend yield, right? It's not a super large percentage of my portfolio. However, Schwab thinks it's actually going to perform really well. I am not educated enough in short-term markets, and even short-term, even the companies I love the most have the most money in short-term. I don't really know. 1 year, I like 3 to 5 year outlook, right? It's much easier to predict and not as much as priced in my opinion. But anyways, let's see some other ratings. Morningstar, 3-star, narrow here. 3-star buy. Market Edge says avoid, buy a weighted average score, different ESG stuff. Let's take a little bit look at the dividend payout over time. Yeah, so they hike it 4%, 4%, 3%, 2%, 2%, 2%, 2%, right? We can see what is it back to, and that's just recently. I mean, we can see all the way back to 2014, it was 0.79 per payout, right? So, and I guess we can see the history of the yield too, right? We can see, where was I seeing that? I just saw it. Oh, no, that's just never mind. I'm completely wrong. That's just the normal yield. You could probably calculate the dividend yield, but honestly, it's probably lower than it usually is because the share price has been growing more than 3% and they've only been hiking it 4 to 3%. So you may see it more reflected in share growth over the next 5 to 10 years if they keep that trend up. However, even with the 3.5% dividend yield, maybe even a low threes, you're still probably going to be pretty happy. So analysts are half are recommending hold, the rest are saying buy. Roughly, actually, it is exactly half. At least right now, it's 10 are saying buy or strong buy, 10 are saying hold. I usually don't look too much into analysts. They rarely have anything truly interesting to say. They very even rarely give sell ratings, right, or underperform. Usually, it's either hold or buy, which basically means I don't know, right? So, but anyways, that's all I got for today, guys. I like Duke's Energy. I think it's a good company. I think it's a good diversification pick. I like the dividend. Is it going to be like a barn burner beating tech stocks? Very likely not. However, I like the pick. So, but anyways, that's all I got today, guys. I appreciate if you enjoyed the content and you enjoy my content. I do daily stock videos on this channel. I'd appreciate if you subscribed. It really helps the channel out a lot. YouTube's like, oh, people like this guy, and then they recommend the content more. So, anyways, I appreciate all of you for watching. I'll catch you next time.